Hello and welcome to Dukascopy TV on Tuesday the 21st of May. Now, with key US data out this week and the Fed's Ben Bernanke giving his testimony on the economy tomorrow, I've decided to look at the vast areas of farmland in the US, and I'm asking my guest whether record stimulus is pushing financial institutions to take on more credit risk and as a result creating a bubble. Well, joining me on the line is Professor of Finance and Specialist on Asset Prices at the European Business School, Rasa Karapandza. Thanks for joining me, Mr. Karapandza. Let's start with the idea that all these stimulus programs created by the Federal Reserve are forcing the likes of banks to take on more credit risk and, as far as the price of farmland is concerned, is creating somewhat of a bubble. Do you agree?
It's very difficult to identify bubbles when you are not actually at the end of them. So you can basically maybe say that bubble existed when it already bursted. And actually, some people would say that we don't even know what a bubble is. Especially with farmland, it's difficult to say it because it's not only that farmland prices are rising, but also food prices are rising at the same time. So as a consequence, it's difficult to say actually maybe this is a fair increase in price. Now, it's likely that it's not. Why? Because we have a lot of interventionism on this side, and when we have interventions, it's very likely that a bubble is being created. I mean, this is something that we know from 17th century on. If you look at things like tulip crisis in the 17th century, we basically had the same thing. We had a sharp increase in price, which was basically pushed by the government's intervention. In a sense, they allowed everybody to print their own money who was able to bring silver, and at that time people were bringing a lot of silvers from South America and they were printing their own money. So the price of bulbs of tulips has increased so sharply that it reached the level that at some point for one bulb of a tulip people had to work for, so shop owner in Amsterdam had to work for almost 16 years or so. And we are observing similar thing. We have government interventions, and it's very difficult to predict where do they lead, in a sense.
But is farmland in the US a key component to the economy? I mean, we've seen a weak grain market of late, and yet farmland prices are still rising. In fact, it's risen 15% on last year during the first quarter in districts that include Illinois, Indiana, Iowa, Michigan, and Wisconsin. Surely a bubble is imminent.
For sure, this is an unusual increase in price given the economic situation in which the whole world is. But still, I mean, we see increasing prices in food over the last 10 years constantly, which are driven by two reasons: increase in oil price, and the other thing is there is a huge increase in demand for biofuels, ethanol and biodiesel. So, I mean, it's really difficult to say whether we are in the middle of a bubble or not, but given that the intervention is so high, likely it could be the case.
And what would be the resulting factor in all this for Ben Bernanke and the US economy if we are to assume that, for a moment, farmland prices in the US are at the start of a bubble phase?
Well, for Ben Bernanke, that would be probably a very difficult situation because it would not be the first bubble that he's kind of running into, and he didn't even properly went out from the first one. So I guess for him it would be a very difficult situation, especially given the fact that Obama is running his second mandate, and I don't know. It would be a difficult situation for Ben Bernanke. And when it comes to the U.S. economy, I mean, U.S. economy is service-oriented economy. Agriculture is important, but it doesn't take a huge fraction of the U.S. economy. So it would be a hit, but it wouldn't be too huge of a hit if this bubble bursted. And it's not unlike in financial sectors where you have very, very large spillovers. I don't think that such a spillovers would exist in agriculture. But it would definitely be a hit, especially given that the last crisis isn't even over yet properly.
Okay, just rounding off this ongoing debate, Mr. Karapandza, how and why can the idea of a price bubble be misinterpreted?
When it comes to bubbles, almost always we have like three components. We have usually some novel product. Then we have financial markets, and then we have the involvement of governments, which are kind of, by their action, stimulating the creation of a bubble. And here it seems like that as well, because I wouldn't be even afraid of a bubble in farmland prices unless there was an increased demand in food. An increased demand in food comes from various reasons. Among other, we have these novel products like biofuels and ethanols. I mean, this is one reason. One second reason is U.S. exchange rate. Third reason is increase in fuel prices. And these are three main components that are driving the increase in food prices. And as the demand and price of food prices is increasing, there is a demand for land, of course, going up. And if you couple that with the government intervention, where they are keeping low interest rates, you have a perfect setup for a bubble creation. Always you have these kind of three components: government involvement, new financial products, and financial markets. And this is a similar situation. This is kind of, I would say, Chicago-style economists like Kenneth French and Eugene Fama. You can always see interviews with Eugene Fama saying, when somebody asks him, are we in a bubble, he says, what is a bubble? Define me a bubble. It's very difficult to define a bubble. And in that respect, he is correct, but it doesn't mean that we do not feel consequences when these things burst. And governments usually, when they try to fix them, like, I don't know, after the World War II in the big recession, I mean, they tried to fix it and we ended up in a World War II in a sense. Some governments did their job well, some didn't, and we ended up in a World War II. The similar situation was after dot-com bubble. They tried to fix it, well, we ended up in a big real estate crisis.
That's all for now. When we next look at the US, we'll be picking through the FOMC meeting minutes, but for now, it's goodbye from me.